Midcap Analyst Buy and Rising Price Targets from 14th to 18th May 2026 by Value and Momentum Portfolio. Welcome back. Today we are running through something specific and actionable, a screen of mid-cap stocks, companies between $2 and $10 billion in market cap, where analysts have been raising price targets in a meaningful way over the past 15 days. We are talking raises of 10% or more, combined with implied upside of at least 10% from where these stocks are trading right now. And what we found is interesting. This is not random noise. There is a cluster forming in a few specific areas, and we want to walk you through what is driving it, which names stand out, and how to separate genuine conviction from analysts just chasing a move. Quick disclaimer before we get into it. This is informational only, not investment advice. Do your own work. What is moving and why? Let me start with the context. Most of what we are seeing right now is a direct result of Q1 2026 earnings season wrapping up. Analysts have fresh revenue and margin data. They are resetting their models. That explains the timing. Three sectors are doing most of the heavy lifting here. First is healthcare, particularly in the 2 to 10 billion range. Names like Corcept Therapeutics, Progeny, and Astrana Health are seeing what looks like a valuation reset after a long stretch of price compression. Deutsche Bank also issued a series of upgrades on the managed care side. Elevance, Humana, Centene. So there is something broader happening in healthcare sentiment right now. Second is industrials tied to infrastructure and defense. Timken, Dycom, Intuitive Machines. These names are getting re-rated as the onshoring and defense spending story continues to build. Third, and this is where volume is highest right now, cloud and data infrastructure. Snowflake, Marvel, Nutanix. We are talking 10 to 15 separate firms raising targets on each of these names. That is not a coincidence. That is a consensus forming. For Marvel specifically, 9 firms have set price targets in the 225 to 275 range. The driver is custom silicon demand for AI infrastructure. It is durable, and analysts are reflecting that. For Snowflake, the revisions suggest confidence is building around how the data cloud monetizes AI workloads over time. 2. The 5 names from the screen. Now let us get into the actual screen results. 5 names passed the filters. Price target raise of 10% or more in the last 15 days. Implied upside of at least 10% from current price. Market cap between 2 and 10 billion. Corcept Therapeutics, ticker CORT. Current price, $68.38. H.C. Wainwright just raised their target from 75 to 95, a move of 26.7%. Canaccord went from 110 to 135, a 22.7% raise. Both happened on May 28th. The implied upside to Canaccord's target alone is 97.5%. That is a lot. So what is the story? Corcept is a specialty pharma company. Single product Korlym for Cushing's syndrome. 98.5% gross margins. Zero debt, essentially. The stock fell from $91 in October 2025 all the way to $31 in March 2026, a 66% wipeout, driven by fear around generic competition for Korlym. It is now at 68 as the pipeline drug, relacorilant, completes phase 3 and begins to de-risk the story. From an institutional standpoint, the market cap collapsed from around $12.1 billion in Q1 2025 to roughly $3.7 billion by Q4 2025. The big funds have not yet confirmed major buys in the May 2026 13F filings, but specialist healthcare names, MPM BioImpact, Boxer Capital, are accumulating. These are not generalist funds dipping their toes in. They are positioning ahead of a pipeline event. Intuitive Machines, ticker LUNR. Current price, $45.70. Roth Capital raised from 50 to 75, a 50% increase back on May 15th. B. Riley went from 35 to 60, a 71.4% raise on May 21st. Highest new target is 75, implying 64.1% upside from here. Here is the thing with Intuitive Machines. The stock jumped 31% in 2 days after the target raises, May 26 to 28. So the gap has narrowed fast. But 64% implied upside still remains. And the investment case is distinctive. This is the only commercial company to have successfully soft landed on the moon. IM-1 in February 2024. They are embedded in NASA's Artemis roadmap. The switching costs are extreme in terms of recertification and safety validation. And the institutional breadth is notable. Renaissance Technology, Millennium, State Street, Defiance ETFs. That is a range of fund types you do not usually see aligned on a $10 billion space name. Astrana Health, ticker ASTH. Current price, $38.33. Barclays upgraded to buy on May 26th, raising the target from 37 to 50, a 35.1% raise. Stevens initiated with a $55 target on May 20th. 30.4% implied upside remaining from where the stock is right now. Astrana is a physician-led healthcare network. They operate in the value-based care space, capitated primary care and specialty practices across 11-plus states. The stock went from $18 in February 2026 to $38 today, essentially doubling in 3 months. Wellington Management stepped in with a $14.8 million position, which for a $2.1 billion company is a meaningful signal. The investment thesis here is structural. Value-based care, where you get paid for outcomes rather than volume, is the direction CMS has been pushing the system. Astrana is on the right side of that shift. The free cash flow is currently negative because they are reinvesting aggressively in acquisitions, but the operating model, if scaled, generates durable margins. Management is guiding to 20 to 25% revenue growth. Timken Company, ticker TKR, current price $126.78. JP Morgan raised from 110 to 130 on May 15th, then raised again from 130 to 150 on May 26th. That is 2 raises from the same firm in 11 days, 18.3% implied upside remaining. Timken is a 120-year-old industrial company, engineered bearings, power transmission components, serves aerospace, defense, renewable energy, automotive OEMs. They reported a 27% year-over-year EPS beat in Q1 2026, and their defense and renewable energy segments outperformed. The free cash flow picture here is clean, over $750 million on a trailing 12-month basis. FCF yield is around 8.5%. 2 Sigma put in a $71 million buy, which for a quant fund is a model-driven signal, not a gut call. The flag on Timken is the pace of JP Morgan's revisions. Raising twice in 11 days for an industrial, that pace suggests they may be chasing the stock up rather than leading a re-rating. Only 18% upside left. It is the highest quality name in the group, but also the most modest remaining opportunity from here. Progeny, ticker PGNY. Current price, $25.69. Canaccord raised from 19 to 30, a 57.9% raise on May 19th. UBS initiated at 32 on May 21st, 16.8% implied upside to Canaccord's target. Progeny is a fertility benefits management company. They sit between large employers and fertility clinics, self-insured Fortune 500 clients on one side, a curated network of clinics on the other. The stock fell from $28.75 in January 2026 to $16.10 in April, a 44% drop driven by employer budget pressure and healthcare cost scrutiny. It has since recovered. The defining institutional signal here is Soleus Capital, a healthcare specialist fund, putting in $35.1 million. That is the largest single institutional buyer in the group. For a $2 billion company with near zero debt, that is a concentrated and deliberate bet. The fertility treatment demand story is demographic, delayed childbearing, rising IVF utilization, and that does not reverse quickly. Signal versus noise. Not all analyst raises are equal, so let us be direct about how we see each of these. Corcept, Astrana, and Progeny are what we would call conviction raises, fresh upgrades, stocks that have not fully responded, and meaningful implied upside still on the table. Corcept at 38 to 97% implied upside depending on which target you use. Istrana at 30% with a full rating change from Barclays. Progeny at 17%, but with specialist healthcare money leading the charge. Intuitive Machines we would classify as mixed. The conviction was real. The price targets were there before the stock moved. But the 31% jump in 2 days has partially closed the gap. 64% upside is still compelling, but you are buying after a surge, not ahead of one. Timken is a catch-up raise. JP Morgan was behind the stock and raised twice to close the gap. Only 18% upside left at current levels. High-quality business, but modest analyst implied return from here. Bottom line. The thing that unites these 5 names is the timing of where analyst attention arrived. Every single one of these stocks experienced a meaningful drawdown before the re-rating cluster showed up. That is not a coincidence. Analysts tend to upgrade on the way back up after the damage has been done. The question is always whether you are early enough to the recovery to still capture the upside. If we had to rank the 5 by remaining opportunity relative to conviction, Corcept sits at the top. A 98.5% gross margin business with zero debt, down 53% from its 52-week high, with 2 specialist funds pre-positioning for a pipeline readout. That is a specific setup. Intuitive Machines is the highest asymmetry growth name, but the stock already moved hard this week. Istrana offers the best reward to obscurity ratio, small, underfollowed, with Barclays and Wellington both stepping in on the same name inside a week. And Progeny is the most asymmetric small cap if you believe fertility benefit adoption continues to scale. All the data is as of May 28, 2026 close. Sources are analyst ratings data, 13F filings from May 2026, and public price data. As always, nothing here is investment advice. This is a research framework, not a recommendation. Do your own due diligence. Thanks for listening. We will see you in the next one.